Hey guys, Freaky Finance here. Last week we looked at Spirit Airlines given the recovery narrative was getting hit pretty hard with the Delta variant and that kind of exciting opportunity in the fact that domestic leisure travel has started to pick up and the share price started coming back down. So this week we're going to look at another company in a different industry, OceanaGold. So this is a gold miner. It does less than 500,000 ounces a year in production. The reason why I'm going to talk about this one is, well, I got a history with it. And there's some exciting news that happened in July, finally. So OceanaGold really has 4 mines that operate, but only 3 operated during the last few years. They have Hale in the United States, which is a decent mine. And then you have Macraes in New Zealand, another decent mine. Like, when I mean decent, these are not like amazing mines. Their AISCs are all over $1,000 an ounce. So not like tier 1 assets by any means, but they're still okay. And then you have Wahi, which is just starting up, so the AISC, obviously when production is low, the AISC's high, right? Usually when production starts ramping, the AISC goes down. It's the operating leverage of a mine, right? And then you have the Philippines with Didipio. And anyway, the Philippines mine got pulled from them right before the real ramp up in gold. And I'll go through this in a bit, but basically I invested in 3 gold companies in 2019. I want to say early 2019. And the other 2 mines or ideas did well because gold went up, right? But this one did not. And then ever since I bought this company, I've never actually seen green. So it's been one of these things where I've kind of learned a bit from it because of obviously the mine specific risks that I talked about when we did Freeport McMoran a while ago, right? With the Indonesia Grasberg mine. So I kind of learned that lesson from this. So it's an exciting one to revisit. But yeah, the reason why I'm talking about today is this news release on July 14th. Basically, they re-signed the Philippines mine again. And the Philippines mine is about 1/3 of the production of the overall company. But more importantly, it has the lowest AISC, so the all-in sustaining cost. Traditionally, it was below 700. So we'll have to see what they guide that as they ramp up. They said it'll take about 12 months, so won't be any amazing news between now and 12 months, but you're going to start seeing production ramp up by the 1/3, and then you're going to see the AISC start going down because this mine is superior to the other ones in their portfolio. It's an interesting time, and the main reason why I'm doing the video is, well, the share price didn't react to it at all. It's like they don't believe it. Maybe they know, like, well, even if they signed it, the local populace won't remove the roadblocks or something like that, right? There's always some angle and some risk to this kind of thinking, but on paper it looks really good. It's like they got 1/3 more production at the lower AISC, and the share price isn't moved. Whereas gold is still gone from 1,300 from when I bought the company to 1,800, right? But the share price is still down 30%. So it's an interesting time for sure. So anyway, just to show the impact, pull this up a bit. Just to show the impact, you can see in prior years they were averaging just over 500,000 ounces, right? And when the mine got pulled, you saw the production got killed. And the Philippines mine was yielding about 120,000. So a lot of the decreases from the Philippines mine pulling. And there was also issues in 2020 as well for the other mines. So they got hit on multiple fronts. But anyway, you can see realized gold price slowly increase over time. But when this happened, the company was actually selling off hard because they lost a key mine, right? And just to show the AISCs, you can see the average just going from, they were able to mine at a cost of 800. Then as soon as the mine got pulled, you can see it just get worse and worse. And now their average all-in sustaining cost for 2020 was really bad, right? Almost 1,300. So anyway, that just shows how critical the mine is. So that's why I'm surprised that the market hasn't reacted to the news. Because it's earnings season, I just downloaded the data again. I tried to pretty up a little bit, but it's not the same. Anyway, earnings season this week was interesting because you had, well, Freeport, AT&T, Intel, Kimberly-Clark. Those are the few that I listened to. Freeport is still executing the ramp up 78%. I'll probably do an update on all the existing ones after all the earnings calls happen again, but Freeport's still doing good. AT&T was interested in the mobility phone side, though their ARPU is still down. Anyway, I'll go through it after. Probably do a different video on like updating all the different positions and thoughts and stuff like that. Back to Oceana. You can see that, well, production fell. Gross margin right here you can see fell. So they were doing around 54% when they still had the Philippines mine, and the gross margin fell. And they did lose their best mine in terms of economics, in my opinion. You can see the gross margin got smacked as well. Well, at the same time, production got smacked, right? You went from your over 500,000 ounces to 300,000 ounces, right? Which is unfortunate because we were right on the direction of gold with this investment. But unlike the other two, which I was able to sell and make a decent amount of money, This one has just been dead forever since I bought in anyway. One of the things that is also interesting is that I saw SGA increase, so the G&A growth, but that's slightly misleading because there's $35 million of this $87 million G&A charge. It's just from idle capacity charges in 2020. So because you can see net profit and loss minus 150. Technically, the cash flow from operations was still there because depreciation for a miner is usually very high. I don't know if we haven't gone through too many miners. Usually, cash flow from operations is actually okay because they have back depreciation and impairments and all that. So then you have the capex from the putting your money back into your existing mines to keep the production going, right? And so you can see that they actually dipped below negative free cash flow in 2020, mainly because production got slammed, right? So even though gold ripped from what they realized is an average of 1270 2 years ago to 1600 for the total fiscal year 2020. Now we know gold is still around 1800, so this trend has just continued on a year-over-year basis. It'll be interesting to see what happens if gold is still at 1800 an ounce and we get all the production from the Philippines mine coming back online. And it's not a small amount for this company. You can see the share price react to this when the fundamentals deteriorated. You can see this company used to be worth about $3 billion and it pretty much got 40% cheaper. So now it's only worth $1.8 billion, including the debt that it took on during the more stressful years. About 40% off, even though gold's gone up about 40%. So that's an exciting thing that's unique to this company. And that does show the key mine risk, right? But now that the key mine risk is supposedly alleviated, it could be an opportunity. That's why I'm doing the video. I already talked about the cash flow from operations. Did have some debt that picked up, but so far, and they did issue some shares, but so far they have quite a bit of cash on hand. So when I go to the balance sheet, you can see that here. But they do have 179 million cash on hand, though. They are increasing their capex in 2021, and we've seen that year to date in 2021, which will help production in 2022 and 2023 for their existing mines that were mining during the 2020 year. I think this helps show the guidance. So they're guiding 360,000 ounces in 2021, which is about 60,000 better than what they did in 2020, though it's still a shadow of what they were without the Philippines mine, right? This one right here. I just zeroed it out for this year. But anyway, you can see the production's really almost like a third Hale, a third McRae's, and a third the Philippines one. Then you have Wahi, which is just starting to ramp up. So, but you can see here, like I just put in my own little thing, like what would happen, what would 21 look like if they were able to sign the contract earlier and we would have seen production, right? And I can see what the actual margin would look like at 1800 gold an ounce based on their traditional AISC and their guidance range. So this was their guidance for mid-range for the other mines, and then for the Philippines one, since I didn't have one because I didn't guide anything, I just assumed what it was before plus about $50 an ounce. But I that's the guidance. So they're doing their earnings call at the end of July, and that's what I'm going to pay attention to, is to see what they're saying, like how much cost does it take to start up this mine again, and if they guide the all-in sustaining costs for the mine, that'll be nice too for 2022 when this starts up again. We'll see if they will. It's still a bit away from when they can actually restart this mine. But anyway, this helps see the magnitude, right? So I can see, okay, production would come back up about 33% from their existing guidance. Well, their potential profitability comes up by about 40% or 38%. So, and that's exciting to me because the share price didn't move to reflect that change. But yeah, that could just be like the market not reacting because they don't believe the news yet. Or maybe it's too far out, a year out. Maybe they don't trust it. Or maybe they don't know where gold's going to be in between that time. But all I know is that the company is still very cheap, and they just got the critical mine back signed by the local authorities. But again, maybe that doesn't mean anything, right? Maybe they don't enforce what they signed, and the local populace just roadblocks the mine, right? You never know. So that could be what's happening here. But on paper, this looks exciting to me, right? 40% more profitability with an increase in 33% of production. Technically, when I map that out, if their current guidance on their existing mines plus the Philippines mine, you're getting like less than 3 times cash flow for 2022. So that assumes the beginning of 2022 is when the Philippines start, which is when it won't. It'll be halfway through. It's still interesting, right? Because that 2023, assuming your gold price hasn't moved, and if it goes up, it's just gravy, right? They have a lot of existing capex that's going to turn into production on the other mines that they have over the next like 2022, 2023, 2024, which is nice. That's what I look at, right? Instead of like we saw the decrease in fundamentals for the last 2 years, now we're going to see the reverse, an increase in production and a lowering of AISC at the same time, which is nice. So anyway, back to the slides. This is where I'm just pulling the information for why it says they say it'll take 12 months to restart the mine. That's where I got 120,000 ounces a year, so about 10,000 a month, and that's not a small amount for this company. Like I said, it's about a third of production, of existing production. That being said, so this slide is without the Philippines mine because the news is so recent. The presentation hasn't been updated. Anyway, you can see the AISC coming back from the super high 1300, and they were already guiding it down to be around more real, like better in the 1100 range, and then slowly fluctuating there for a bit, and then going back down in 2024 when production really starts kicking up in some of these mines again. Though now they're going to have to, assuming Philippines does start halfway through 2021, you're going to see this inflect lower quicker. Well, production is also increasing quite a bit, right? About 120,000 ounces, which isn't a small amount. Right, this is going from 300 to 360 to say 400, but now you have 300 to 360, something that could be about 510. So you kind of accelerate this multi-year outlook by having that mine, assuming they can get in there and mine it like the paper would suggest. But yeah, anyway, you can see basically saying, hey, if we, based on our 2025 production, you can see like where our AISC's going to be in our production. So their AISC, they're pretty much at the worst they're going to be. That's their claim. And then they're just going to get better by 2025. But if they get the Philippines mine back, they're going to be even better, and their AISC's actually going to be back down to around 825, which tells you the power of the Philippines mine in terms of cost, superior economics, right? When you can get 1 ounce out of the ground at a cost of 600 versus 1100, it makes a big difference. When I went through the annual, I did see the long audit letter from Pricewaterhouse. So usually, just a rule of thumb for you guys when you do your own work is that I always look at this. Usually it's only about a page and a half, but this one is quite a bit, quite long, which tells me there's a lot going on that auditor wanted to state, which is always interesting. Really the reason why I just pulled this one up, because I just wanted to see where the impairment was and why. So, but yeah, it was the Philippines mine for 80 million. The capital allocation might change. We'll have to see what happens, because this is before they knew the Philippines mine was going to be signed. So this might change, but you can see the rate of change in growth capex. So right now, 2021 free cash flow isn't going to be that great because capex for growth is high. But then we see this leveling off, and this is nice because during 2022 at the back half, we're going to start getting the production from the Philippines, right? So you're going to have your growth capex falling off while your production and cash flow from the Philippines starts picking up hard, right? And that's a very heavy cash flow mine, because when you're, say, gold's still at 1800, we don't know that, but say if it still is, and the AISC is at, what is it, 700, say. So they're getting 1100 an ounce in cash flow, right? Getting quite a bit of pickup in cash flow right away. At the same time, your growth capex is decreasing, which makes 2023 and 24 look very interesting. And that's why I'm getting excited. So one of the things that I did is, I know on the last quarter, I think I talked about OceanaGold really quick, but I decided to do, because OceanaGold was up 100%, sell that one and buy Oceana, because that was down about, I don't know, 40% or something, 30 something percent. So anyway, so I averaged into that one, so now I'm only down 20%. But yeah, the share price hasn't moved, which is exciting to me, because I'm basically getting a company 20% cheaper for me. Well, gold has gone from 1300 from when I originally got in so many years ago to 1800 today. Unlike the other gold companies, which have actually reflected an increase in gold over time, the gold price over time, and the share price appreciation accordingly, this company has not participated in that at all, because of the key mine risk. So it's just an exciting exercise. I pretty much basically just merged the two gold positions together into Oceana. So yeah, this is the multi-year outlook pre the Philippines mine. And you can see the same trend. Like, they were planning to get production up and their AISC down at the same time, with 2020 actual being the worst possible. So they already were getting better in 2021, but now the Philippines, when this comes on the back half of 2022, it's just really going to tear this and accelerate these 2023 and 2024 years, which is exciting to me, because then I get the AISC back down in the 800 range, right, for the whole company, instead of at this current 1300 range, which is kind of ridiculous. Anyway, talked about the same narrative over and over again, but I kind of want to stress it because it's kind of exciting, right? It's kind of unique. So OceanaGold, I remember getting back into this, I want to say it, maybe in this early 2019 period, like 430, maybe 420, something like that. And anyway, it's just been a disaster, because since I bought it, the mine got pulled, so that you can see the decrease in performance, right? And that's what we saw in the financials as well. This company got destroyed in terms of free cash flow, right? Because that mine was so critical. And then you had the COVID panic in March 2020. Then you had an interesting rebound, which was weird. And now we're back here in a slow range, despite gold going from, let's just say this 2018 is 1250 an ounce, or 2018, and the gold has gone from 1250 to 1800, but this miner's gone from $4.50 to $2.25. You get gold that's gone up about 50%, and you get the share price that's gone down about 50%. This is exciting to me, because I think, that's why I'm in it, this company is really worth about $5. If they can actually get the value out of the Philippines mine that they've just technically unlocked on paper. But we'll have to see, like, does that paper even mean anything, right? And then this whole video is kind of meaningless really. Right? So it's always a fun thing. And then I did Centerra was one that I wrote up with the gold price just to show the difference. So in 2019 early, I bought in, yeah, right around here. And instead of the OceanaGold where I got ripped, this one pretty much offset it. So that's the good thing about diversifying, right? But you can see just how important key mine risk is, because this thing went from 7 to 10, and I think I wrote it up to here and sold it. I didn't get the high, that's for sure. That's crazy high. I think I got out at like 12 or something. Anyway, you can see that usually an increase in gold prices is an increase in the gold miners. But yeah, I wanted to show this one just to show the difference, right? Obvious. And then it does reference the key mine risk again, because it's like one of the key mines for Centerra got pulled just recently in the early part of 2021, and you can see the share price react to that too. So there's always key mine risk. And I think there's going to be a trend in the overall gold industry is that if you have a smaller miners, you have this key mine risk in certain regions of the world, right? I know this was I believe this was the K Republic, and yeah, they pulled it on Centerra, kind of just like what happened to Oceana in the Philippines 2 years ago. And we've seen this with other miners as well, right? They're getting, the local populace is wanting more from the gold mining company because they view it as their resources that foreigners are extracting and getting the money from it, right? Which is a fair enough stance, but it's a trend to be in the back of your head, which is a restriction on supply if enough do it, right? Though most of the tier 1 assets are in friendly mining jurisdictions, so a lot of the heavier production hasn't been impacted, but it's something to keep in your back of your head when you're looking at supply and demand of gold over time, is the nationalistic approach that a lot of individual countries are taking to protect their assets, which means gold is more scarce. Though at the same time, when you're investing in a miner, if you're that place that just got their mine pulled, you're in trouble, right? And I think that's what this Oceana video hopefully shows, is that even if you're right on the direction of gold, it doesn't mean you're necessarily going to be right on the miner. Luckily, at this point, we get the mine back, assuming we do, and then for this investment would likely do well over the next 2 years. So I'll have to see if I'm right or not. I'd like to know your thoughts, or if you have any specific gold miners you like me to look at. I was looking at Kinross as well, which was pretty interesting. They actually have quite a lot. They're a little bigger, maybe about 4 or 5x bigger, and they have some really interesting tier 1 assets, which is exciting because if you listen to Barrick's calls, they said that they're interested in tier 1 assets and only tier 1 assets. So you're starting to see, I think we're going to start seeing people pay a premium for tier 1 assets, which is exciting, right? Because I still own Freeport, which is technically a tier 1 asset, even though it's a copper mine primarily. It just gives off a lot of gold, so it shows up in a lot of these gold miners reports. But anyway, have a great rest of your weekend.